Welcome to Trading with WebRDD. You are watching today's daily forecast for gold. Today is Wednesday, and as you can see, yesterday a big bearish candle was created. We did not expect that kind of big candle to form in just one day, but we had been expecting it since last week. I clearly mentioned that in my daily forecast. I mentioned clearly that we needed a bearish pullback because the market was in a very big imbalance. Now you can see there is some balance. The price has come down to meet the daily chart 20 EMA. After grabbing some liquidity, the price now looks ready to go up, but we need to confirm it before we buy. That's very important. If you look back at the earlier stages, what happened on the daily chart when the price came down to the 20 EMA around April and also in August, you can see several times the price met the 20 EMA and it didn't consolidate for long in that area. Therefore, we can expect some quick pullbacks even after this current one. Now I'm going to the 4-hour chart and we'll check how we can enter the market today. Before that, I'm deleting all the old drawings. Now you can see a very clear chart. You can see there were a couple of pullbacks yesterday. This is the first point, and that is the second point. On the resistance side, we don't need to draw any resistance lines on the 4-hour chart, but I would like to move this support line a little higher because we can see liquidity was grabbed below that line, and now the price is moving upward. So that is our new support. Now I'm going to identify the best buying and selling zones in the market. We can see there's a big wick. With that big wick, I would like to draw our first buy zone because the price moved rapidly upward after coming down to that area. This is our first buy zone. I would also like to draw another buy zone based on this upward movement. This is our second buy zone. I'll adjust these zones using the 1-hour chart. After that, I would like to draw some sell zones on the same chart. The first sell zone I can see on the 4-hour chart is around the previous support area. This is the area that caused the rapid drop, so I will mark it as a sell zone. This is the only sell zone that I can find on the 4-hour chart. Now I'm going to add any more zones if needed using the 1-hour chart. Beyond that drop, you can see there is a doji candle. I would like to draw another sell zone based on that. This is another sell zone we can identify. I would also like to draw another one around this doji candle. These are the two other zones that I can find in this market using the 1-hour chart. I'll also adjust the buy zones with the 1-hour chart. These are the zones that we can draw in today's market. Now I would like to create the best buying and selling setups. For me, the best setup is within that sell zone. If the price breaks up, you can see there's some breakout with the 20 EMA on the 1-hour chart. Now the price has broken up and is testing the level. I would like to see another breakout. After that, if a 15-minute fair value gap forms, we can enter the market. On the 15-minute chart, there is already a fair value gap created, but this is not the ideal time to enter the market because the breakout just happened, and we don't know if there was any liquidity grab. You can see there was a rapid downward movement after hitting the 20 EMA on the 1-hour chart. That's why I always say this 20 EMA line is very important when you are entering the market as a buyer or a seller. If we can see this line acting as support, then we can enter the market, but only after a breakout, a retest, and another bullish candle on the 1-hour chart. Then you can enter using the 15-minute fair value gap. There are still no clear confirmations to buy or sell because we need to see a clear 1-hour bullish candle. Even on the 4-hour chart, you can't see any evidence to enter the market as a buyer or seller yet. This is a very important place to wait before entering the market. Also, you can see the 50 EMA on the 4-hour chart is just above the 1-hour 20 EMA. This is a very complex zone. You have to be patient and wait for strong confirmations before entering the market. This is the first scenario we can expect. Now, in the next setup, if the price comes down again to the bottom buy zone, you need to wait until a 1-hour bullish candle forms. After that 1-hour bullish candle forms, you can enter the market using the 15-minute fair value gap. Your first take profit will be around the sell zone, and you can hold for further upward movement. This is our second buy setup. You can also enter the market as a seller. If the price comes around the sell zone, you can enter the market with the 15-minute fair value gap after you see a bearish candle at that time. I would like to see any resistance EMA line, either the 20 EMA on the 4-hour chart or the 50 or 100 EMA on the 1-hour chart around that area. If not, do not enter the market, because we need at least 3 confirmations before entering. First, the price must touch the sell zone. Second, the EMA line should be within that sell zone. Third, you need to see a bearish candle with a 15-minute fair value gap. These are the sell zones that I can see today as the best possible selling areas. There is another sell zone nearby, but I don't like to enter that because it's not in the supply area. This one is in the equilibrium area, which is a very low probability place to enter the market. It's very important to stay patient before entering the market. These are the things I can see in today's market. I hope you're enjoying my videos and gaining extra knowledge with these EMA lines and trading setups. If you really like my video, please subscribe, share, like, and leave a comment in the comment box. Thank you very much, and see you tomorrow.